All right, get ready to dive deep. Today, it's all about real estate investing. We got a request from you guys to unpack this topic, and you sent us this really interesting YouTube video from Ken McElroy.
Oh yeah, Ken McElroy.
Yeah, he's a real estate pro. So
Uh,
today we're talking myths, strategies, those key insights, the whole 9 yards.
the whole 9 yards, yeah.
By the time we're done with this deep dive, you'll have a much clearer picture of what it takes to really make it in real estate.
Real estate is a field just shrouded in myth. I mean, it really is.
Yeah.
And, these misconceptions, they often prevent people from even from realizing the true potential of investing in real estate.
It can be intimidating, right?
It can.
Especially when you hear all these conflicting ideas. And I think McElroy does a good job of breaking some of that stuff down.
He does, yeah.
So let's jump right in.
Yeah, let's do it.
One of the biggest myths, and McElroy starts with this, is this idea that you need to be swimming in cash to even think about real estate. Like you need to be, super wealthy. But he actually started pretty small.
Yeah, he did.
He bought a condo for just over $100,000 with a $20,000 down payment.
Wow, that's
And then years later, he invested in a $9,000 apartment complex with zero out-of-pocket expenses.
yeah, he partnered with investors.
Right. Yeah.
So, like a classic syndication, right?
Right.
A bunch of people get together, pool their money, and buy this asset together.
So it's like he's saying, look, there are different ways to play this game.
Yeah, you don't need to be a millionaire.
Right. Yeah.
It's more about finding good deals and then leveraging those partnerships, those investor partnerships. Like in that apartment complex deal, he partnered with investors who put up the down payment, and in exchange, they got a piece of the pie.
Right. It's that win-win that everybody always talks about.
Yeah, exactly. And that's what a lot of this comes down to.
Now, that condo versus apartment complex comparison really stuck with me because McElroy actually suggests that starting small might not always be the safest bet.
I know, right?
Like, I would have thought, okay, I'm going to start small, I'm going to work my way up. But he makes some interesting points against that.
He does, yeah.
What was your take on that?
He's right. Because if you think about it with that condo example, like let's say you have a tenant and they move out, right?
Oh, yeah.
Then you're shouldering the whole mortgage by yourself.
Yeah, you're in trouble.
But with a larger property, a multi-unit building, even if one or two units go vacant, you've still got that income coming in from the other units.
Well, okay, so it's kind of like diversifying.
It is. It's diversifying your portfolio, but with real estate.
Oh, okay.
And another thing he pointed out is that loans for those larger properties are often asset-backed. So the risk is tied to the property itself, not your personal finances.
Oh, okay, I see.
So it can actually be less risky than putting all your eggs in one basket.
I see what you're saying.
Yeah.
That makes a lot more sense. Now, speaking of risk, and I know we're jumping around a little bit here, but it's all connected. What about all those no money down deals and all those house flipping shows?
Oh, man.
They make it look so easy, you know?
Right? It's almost misleading
Mm-hmm.
because what McElroy prefers is that buy and hold strategy. He uses his own $13.8 million property as an example.
Oh, wow.
He held on to it even though it went up in value significantly
Yeah.
because selling it would mean a huge tax bill.
Oh, yeah, of course. Yeah.
So instead, he refinanced,
I see.
pulled out some equity, tax-free,
Oh, smart.
and then used that money for more investments.
Wow.
It's brilliant.
So he's really playing the long game there.
Exactly.
It's like planting a tree. You're not expecting fruit right away.
I got to nurture it, give it time.
Give it time, let it grow. Exactly.
Exactly.
So it's about building something lasting, not just chasing those quick wins.
I like that.
Now, McElroy also shares this really interesting story about a 10-acre piece of land and how different developers saw different opportunities in it.
Oh, yeah. I remember.
Some saw dozens of homes, others saw luxury estates or a shopping center. And then there was one developer who imagined a 150-unit apartment complex.
Right.
And it's wild how the same piece of land can spark completely different visions.
It just shows you there's no secret formula or Midas touch.
Yeah,
It's about analyzing the market,
right.
strategic thinking.
It's like, one man's trash is another man's treasure.
That's a great way to put it.
Yeah, yeah. It all depends on your perspective and your understanding of the market. And he also talks about this fear of failure.
Oh, we all have it.
We do, yeah.
Yeah.
And he admits that he struggled with it too, but he learned to push through those doubts and not let past experiences dictate his future.
I think everyone listening to this can relate to that.
Yeah.
It's about recognizing those doubts, but not letting them paralyze you.
Right, don't let them stop you.
Exactly. The key is to build your skills and knowledge.
Yeah, I think the confidence comes with that.
It does.
The more you learn, the more confident you become.
I agree.
Now, this is a big one, and I know I've used it a million times, the I don't have time excuse. It's that classic roadblock.
Oh, for sure. That's a popular one.
Yeah, but McElroy, he turns that on its head. He says it's about choices and priorities.
Right?
If you're truly passionate about something, you'll make time for it.
You will, yeah.
You know, he really encourages us to examine those priorities, to really think about how we're spending our time. Because maybe we need to see real estate investing not as this scary, time-consuming monster,
Yeah.
but as a rewarding endeavor.
That's
Like,
right.
yeah, it's challenging but rewarding.
Maybe it's more about perspective, right?
It is. It's all about perspective.
Yeah.
It's like anything else in life, right? If it's truly important to you, you'll find a way.
Absolutely. And sometimes that means maybe delegating or becoming more efficient with your time.
Absolutely. I think that's a great point.
Yeah, it's all about finding that balance.
Yeah, he also busts this myth that you need like this huge network to even get started.
Right, that's a good one.
He shares his experience of going into the Portland, Oregon market knowing absolutely no one.
Wow, that's brave.
Yeah, but just through doing his research, being proactive, reaching out, he built that network from scratch.
That's really inspiring. So you don't need to be, born with a silver spoon or anything.
Well, you don't.
Yeah.
It's about being resourceful and taking initiative.
Yeah, taking initiative, exactly.
Now, another big myth is this idea that you need to be this master negotiator to make it in real estate.
Oh, yeah, the smooth talker, right?
Smooth talker. But McElroy has a pretty straightforward approach. He presents a solid, well-researched deal and says, take it or leave it.
Right.
It's about confidence in the numbers.
You got to know your numbers.
Yeah.
You got to do your research.
Exactly. It's not about being a smooth talker. It's about knowing what the deal is worth.
Yeah, exactly.
Which brings us to the myth that you need to be a real estate whiz, like from day one.
Oh, yeah. I remember when I first started, I was so lost.
It's a lot to take in.
Mm.
But McElroy, he's big on emphasizing that success is a journey.
It is a journey.
It's not a destination.
That's true.
You know, he learned by doing.
You did, yeah.
Starting small, gaining experience gradually.
Yeah.
And it's reassuring to know that even the pros, they started somewhere.
Everyone starts somewhere, right?
They were beginners at some point.
Yeah.
It's a good reminder. And then he brings up that fear of failure again,
Oh, yeah.
which I think is something we can all relate to.
We can, yeah.
And he uses this term analysis paralysis. Have you ever experienced that?
Oh, all the time.
So it's like that feeling of getting so stuck in the details, in the fear that you're just frozen.
Yeah, you overthink it.
You overthink it and then you never take action.
It's like you're afraid to make a mistake,
Yeah, exactly.
but you have to, right?
They do, yeah.
You have to take that leap
Yeah, McElroy's message is to trust the data, make that calculated decision.
and jump in.
And jump in, yeah.
Take that leap.
He also debunks this idea of like tricks of the trade.
Oh, yeah.
You know, he says there are no shortcuts.
It's funny because I used to think, there were all these secret strategies.
Like, yeah, the gurus have these like secrets.
The secrets, exactly.
But he says it's all about the fundamentals.
It is, yeah.
Set your goals, be persistent, understand the process.
Yeah, those are the keys.
Yeah.
And I would also add, surround yourself with the right people.
Yeah, that's a good point.
Mentors. Get a good attorney. Get a good broker.
Yeah.
A good property manager.
Yeah. Find people who can guide you.
Absolutely.
All right, we've spent a lot of time busting those myths. So now let's shift gears and talk about what McElroy actually recommends for getting started in real estate investing.
Yeah, that sounds good.
And he focuses on two key things: setting goals and building your team. He's a big believer in goal setting.
Yeah, and he's got that goal power thing, right?
Goal power, yeah.
I like that goal power.
And it's about having a vision, right?
You got to have a vision.
And goals give you that focus. They help you make those tough decisions.
And I think it's important that those goals are measurable, attainable.
That's a good point.
Yeah.
And also review them regularly.
Right. Like adjust them as you go.
Exactly, because things change.
Things change, exactly.
Now let's talk about building a team.
Okay, yeah, good idea.
This is one of my favorite parts because McElroy, he tells this like cautionary tale about an investor from Seattle who jumped into a property in Phoenix without doing any due diligence, without having a team on the ground.
Oh, I remember that story. That was a mess.
It was a disaster.
Yeah.
The property was full of problems that could have been avoided with a good local team.
Right. And it just shows you how important it is to have experts on your side.
Right.
Your attorney, a good broker, contractors, property managers,
It's like having a pit crew for your real estate race car. You need the right people in place to keep things running smoothly. Now let's dive into research and market
Oh,
analysis.
yeah, that's crucial.
Because McElroy has this really interesting three-level approach to research.
Right.
And he uses his experience in Portland, Oregon as an example.
Yeah, I like that.
So he starts with what he calls level one, which is online research.
So the basics.
Yeah, the basics, just to get an overview of the market.
Right, right.
Like he started researching Portland from Arizona. He was able to find out about the city's urban growth boundary, their transportation, even the demand for downtown living, all online.
Wow, so you can really do a lot from your computer these days.
You can get a lot of information just by doing that initial research online, but he doesn't stop there.
Of course not.
Level two, this is where it gets interesting. This is about actually getting out there.
Boots on the ground.
Boots on the ground. He went to Portland, met with property managers, brokers, lenders, even the publisher of the local apartment guide.
Oh, wow. So he really immersed himself in the market.
He did.
Yeah.
Now, there's one more level.
Okay.
Level three.
Level 3, yeah.
This is where it gets, super in-depth. This is about really diving into that data and constantly monitoring the market.
Just staying up to date.
Yeah, you got to stay ahead of the game.
You do.
So this could involve, subscribing to newsletters, following blogs, staying connected with your network, basically. Anything that keeps you in the loop and helps you spot those trends as they emerge.
It's like having your finger on the pulse of the market.
Exactly. You got to know what's happening. Now, McElroy, he also dives into this core concept of supply and demand.
Of course, yeah.
He says you absolutely have to understand these market forces if you're going to succeed in real estate.
Well, yeah, it's like economics 101, but applied to property, right?
Exactly.
Supply is how many rental properties are out there. Demand is how many people are looking to rent.
Right.
You want to be in a market where demand is higher than supply.
Oh, I see.
Because that's where you see those high occupancy rates and ultimately more money in your pocket.
That's where the profits come in.
Yeah, exactly.
He makes this great comparison. I thought this was really helpful between Fountain Hills, Arizona,
Oh, yeah, Fountain Hills?
and Scottsdale,
Scottsdale, yeah.
which are, both nice areas, but Scottsdale has a much stronger job market.
Much stronger, yeah.
So more people are moving there. They're looking for places to live. That drives up demand for housing.
Makes sense.
But Fountain Hills, not so much. Fewer jobs.
Yeah, and that can lead to vacancies
Yeah, that can be a problem.
and lower rents.
Lower rents. Okay, so those market dynamics can make a big difference.
They can.
Now, to really get a handle on those dynamics,
Mm-hmm.
McElroy says there are three key drivers that we should pay attention to.
Okay, yeah.
Employment, population, and then this thing he calls economic diversity and affordability.
So basically, what makes a place attractive to live and work in?
Exactly.
Okay, yeah, let's break that down.
Yeah, let's start with employment because he says this is the most important driver of demand.
Well, yeah, because people need jobs.
People need jobs, and jobs attract people to an area.
Okay, that makes sense.
So if a place has a strong, diverse job market with stable, growing companies, it's going to attract more people, right? And those people need housing.
Right, which is good for landlords.
Exactly. Good news for real estate investors.
Mm-hmm.
But, and this is a good point, he also cautions against investing in areas that are really reliant on a single industry.
Oh, yeah, good point.
If that industry takes a hit, the whole market could suffer.
You need diversity.
You need diversity. He gives the example of Houston in the 1980s when the oil industry crashed.
Oh, yeah.
It was a tough lesson in diversification, right?
It was.
Jobs were lost, apartments were vacant, property values plummeted.
It's a good reminder to spread your risk.
Absolutely, no matter what you're investing in.
Right.
Now let's talk about population. McElroy says that, in a world where people have so many choices,
Yeah.
you want your properties to be in locations that people actually want to live in.
Oh, yeah.
It's about more than just raw numbers, right?
It's like the personality of a place, right?
Yeah, he calls it the persona. I love that term. It's like each place has its own vibe or personality.
Right. Venice Beach is going to be very different than, Beverly Hills.
Exactly. And he uses the example of Venice Beach with its edgy, youthful energy. And then Scottsdale, which is known for sunshine, golf, a more upscale lifestyle.
They're very different, yeah.
And they both attract different people. It's not just about having houses. It's about offering a certain kind of living experience.
You're selling a lifestyle.
Exactly. You're selling a lifestyle. Now, he also points out things that can boost population growth, like new highways or master planned communities.
Yeah.
Sports stadiums, universities, Even major events like the Olympics, it's about being aware of the forces that shape a city.
Right. It's like you're watching a city evolve.
Exactly. And real estate, it's
It
dynamic.
is always changing.
It's always changing. You got to stay ahead of the curve. And finally, he talks about economic diversity
Oh, yeah.
and affordability.
Yeah.
And again, he encourages investing in areas with a diversified economy.
Yeah, to spread the risk.
Spread the risk, exactly.
Smart.
And he also points out that we need to look at housing affordability in a particular market.
Oh, that's interesting.
Because if people can't afford to buy a house, then renting becomes more attractive.
Yeah, that makes sense.
So he uses cities like New York, San Francisco.
Yeah, those are expensive places to live.
High housing costs. Rentals are in high demand.
Yeah, because people have to live somewhere.
They have to live somewhere. Okay, so much to consider when you're analyzing a market.
Yeah, a lot to think about.
But there's still so much more to cover, like how to evaluate individual properties.
Yeah, that's a big one.
Yeah, but before we get into that,
We need to take a break.
we need to take a quick break. So stay tuned, we'll be right back with more insights from Ken McElroy. All right, so we've talked about analyzing markets, understanding those big picture trends, but now let's zoom in on those individual properties. How do we evaluate those potential deals?
Yeah, it's easy to get swept up in the excitement, right? You see a listing, it looks great, the numbers seem promising. But McElroy, he cautions against relying solely on appearances or first impressions.
It can be deceiving, right? Like a house might look beautiful in the photos, but...
Yeah, he uses this great analogy of swampland. You know, those seemingly attractive deals that turn out to be real money pits.
Oh, I like that. Financial quicksand.
Yeah, exactly.
Okay, so how do we avoid falling for those swampland traps? What are some red flags to watch out for?
McElroy is all about the data. He says forget gut feelings or emotional impulses.
You gotta be objective.
You got to be objective. Focus on those facts and figures. He really stresses understanding the numbers, operating expenses, rental income, vacancy rates, cap rates.
Okay, now those are some real estate terms that I think we need to unpack a bit.
Sure. Yeah.
What exactly are operating expenses?
So operating expenses are basically the costs of running that property. Things like your property taxes,
Yeah.
insurance, maintenance, utilities, even the fees you're paying to your property manager.
It's all the stuff behind the scenes, right?
Right, the stuff you don't always think about. But it's crucial to factor in when you're evaluating a deal.
Okay, that makes sense. Then there's rental income, which I think is pretty straightforward.
Yeah, that's the money you're collecting from your tenants each month.
Right.
But then you also have vacancy rates, which tell you what percentage of your units are sitting empty.
Oh, okay.
So high vacancy rates,
Yeah.
that's a red flag.
That can really eat into your profits.
Exactly. And then you have capitalization rate, or cap rate. Now, this one sounds kind of intimidating, but it's a way to measure the property's potential return on investment.
Okay, so is it as simple as just the higher the cap rate, the better?
Generally, yes. But it's not quite that simple. Cap rates can fluctuate depending on location, type of property, market conditions.
So again, it's about context.
Always about context.
Now, McElroy, he also talks about this thing called income and expense history.
Oh, yes, he's big on looking at that history.
Yeah, so it's like the property's financial track record, right?
It is. You're looking at the property's past financial performance.
Yeah.
You want to see how consistent the income has been, whether those expenses have been reasonable, and if there's a healthy profit margin.
So it's like checking the books before you buy a business.
Exactly. If you see red flags, like if the income is fluctuating wildly or the expenses are skyrocketing or there are a lot of vacancies, it's a sign to dig deeper and figure out why.
Okay, it's like being a financial detective.
You got to investigate.
You got to investigate, find those clues.
Absolutely.
Now, he also mentions pro forma projections, which sounds pretty technical.
It is about looking ahead. Those pro forma projections, they're basically financial forecasts.
So kind of like trying to predict the future.
In a way, yes. They try to estimate how the property might perform in the future, taking into account things like projected rental income, anticipated expenses, even potential appreciation.
Oh, so they're like financial crystal balls.
Yeah, but it's important to remember that these are just estimates.
Right, they're not guarantees.
Exactly. The future can be unpredictable.
Absolutely, things change. Now, with all this number crunching, is there any way to simplify this process a bit?
McElroy recommends using financial calculators to analyze those potential deals.
Oh, okay.
You just plug in all the financial data, the purchase price, the down payment, interest rates, those operating expenses, and the calculator will spit out those key metrics like cash flow, return on investment, your break-even point. It's a handy tool.
Yeah, it sounds super handy. I'm guessing you can find those online.
Absolutely. Tons of financial calculators online. There are free versions, paid versions. You can even find them built into some real estate investment software.
So really no excuse for not doing the math?
No excuse.
All right, so we've analyzed the market, we've crunched those numbers, we've even peeked into the future with those projections. What's next?
The next step is something that McElroy really emphasizes, and that's due diligence.
Now, that's a term that gets thrown around a lot, but what does it actually mean in the context of real estate investing?
It's about going beyond those numbers and getting into the nitty-gritty. It's about understanding the physical condition of the property, any legal aspects of the transaction, even potential environmental concerns.
So it's like doing your homework before you make a big purchase.
Exactly. You don't want any nasty surprises popping up later.
Okay, so what are some of those key areas to focus on during due diligence?
First and foremost, McElroy recommends getting a qualified inspector. They'll assess the property's structural integrity, those mechanical systems, everything from the roof to the foundation.
Okay, so you're not just taking the seller's word for it.
Right? You want an independent assessment from a professional who's not emotionally invested in the deal. And in addition to that physical inspection, you'll want to comb through those legal documents, the title report, property surveys, zoning regulations, any existing leases or contracts.
That sounds like a lot of paperwork.
It can be, but it's important to make sure there are no legal landmines waiting to explode. That's why it's helpful to have a good real estate attorney on your team.
Yeah, an expert who can decipher all that legalese.
Absolutely.
Yeah.
And then there are environmental assessments. These look for potential hazards on the property, things like asbestos, lead paint, mold, even contaminated soil.
Oh, I see.
Those issues can be costly to remediate and could pose health risks to your tenants.
So it's not just about protecting your investment, it's about being a responsible landlord.
Absolutely. It's about doing things the right way.
Okay, so we've tackled market analysis, financial evaluation, due diligence. We're getting close to closing the deal here. What's the final step in McElroy's property acquisition process?
Once you've thoroughly vetted the property and you feel confident that it's a solid investment, it's time to make an offer. But even at this stage, he emphasizes having a clear exit strategy.
Exit strategy. What does that mean?
It's basically a plan for how you'll eventually sell or dispose of the property.
Oh, okay.
It's about having a vision for how you'll eventually cash out, whether it's selling the property after a certain number of years, refinancing to pull out some equity, or even passing it on to your heirs.
So you're not just buying a property, you're already thinking about how you'll eventually exit that investment.
Exactly. It's a crucial part of the overall strategy.
So many things to think about.
Real estate investing is a complex game.
It is, yeah, but McElroy's insights definitely make it feel less overwhelming. It's like he's providing a step-by-step guide.
He's all about knowledge, due diligence, and strategic decision-making.
It's about taking control of your financial future. Now that we've covered the ins and outs of acquiring a property, let's move on to another critical phase. Property management. This is where things can get really tricky.
Yeah, it's often the part that people underestimate. Property management, it's all the day-to-day stuff. Finding and screening tenants, collecting rent, handling those maintenance requests, dealing with legal issues. It can be a lot to juggle.
Especially if you have a full-time job or a family. It's like a whole other job on top of everything else.
Exactly. And that's why McElroy is a big advocate for hiring a professional property manager.
Oh, okay. So why does he recommend that? What are the benefits?
Well, for one, they have experience. They know the ins and outs of managing properties effectively. They have systems in place for everything, from marketing those vacancies to screening tenants to dealing with repairs.
So they basically take care of all the headaches for you.
They do. And he points out that a good property manager has access to a much wider pool of potential tenants. They have their marketing networks and those online listings that help reduce those vacancy rates.
Makes sense.
And they're also pros at screening those tenants, running background checks, verifying employment and income, checking those references to minimize the risk of getting stuck with a nightmare tenant.
It's like having a security guard for your property.
Exactly. They're protecting your investment.
Now, what about rent collection? That can be a hassle sometimes.
Yeah, it can be. But a property manager, they'll handle all aspects of that, from sending those invoices to tracking those payments and even pursuing those late payments.
Oh, so that frees up a lot of your time and energy.
It does, and it helps ensure that your cash flow is consistent.
That's a big plus. Now, what about maintenance and repairs? Those can be a real headache for landlords.
Yeah, but property managers, they have those relationships with reliable contractors and vendors who can handle all sorts of issues. They coordinate those repairs quickly and efficiently, keep your property in good shape, and keep those tenants happy.
So it's like having a personal handyman service on call, but without the hassle of finding and managing them yourself.
Exactly.
Yeah.
And it also protects your investment because addressing those repairs promptly prevents small problems from becoming major costly issues down the road.
That's a smart move. Now, McElroy also mentions legal expertise as a benefit.
Right. Property managers, they're well versed in those landlord-tenant laws. They know all the regulations. They can handle those lease agreements. And even those tricky eviction notices, minimizing the risk that you're going to run into legal trouble.
So it's like having a legal shield protecting you.
Exactly. It's peace of mind knowing that you have someone on your side who understands all the legal complexities.
So all in all, it seems like McElroy makes a pretty strong case for hiring a property manager, especially for newer investors or those who are busy with other things.
Absolutely. It's an investment in your peace of mind and the success of your property.
But how do you go about finding a good property manager? Any tips on that?
McElroy recommends doing your homework. Interview a few different candidates. Check their references. Make sure that they're a good fit for you and your needs. You want someone experienced, knowledgeable, responsive, and trustworthy.
It's like finding any other key member of your team. You got to make sure that they're the right fit.
Exactly. The right property manager can make a world of difference.
Now let's talk about maximizing profits. What are some of McElroy's strategies for getting the most out of your rental properties?
One of the key things he emphasizes is understanding your target market and making sure that your properties are tailored to their needs and preferences.
It's like with any business, right? You've got to know your customer.
Exactly. He suggests doing some market research to understand the demographics, those income levels, the lifestyles of potential renters in your area.
So you're not just buying any old property, you're really thinking about who you're trying to attract as tenants.
Right. You're creating a living space that appeals to that target audience. So if you're targeting young professionals, for example, you might want to invest in properties that are close to downtown areas with easy access to public transportation, restaurants, entertainment. Maybe offer amenities like in-unit laundry, a fitness center, high-speed internet.
And if you're targeting families, you might focus on those properties in good school districts, more spacious layouts, maybe a yard, kid-friendly features.
Exactly. It's all about understanding your target market and giving them what they want.
Now, what about pricing? That seems like a tricky balance. You want to attract tenants, but you also want to make sure that you're maximizing your income.
It's a balancing act. He suggests researching those comparable rentals in your area to see what the going rates are. You want to be competitive, but not undervalue your property.
So it's about finding that sweet spot, the price that attracts tenants, but also ensures a good return on your investment.
Exactly. And once you have that pricing right, you need to market those properties effectively.
Right. You can't just sit back and wait for the renters to find you. You got to be proactive.
You got to be proactive. McElroy recommends a mix of online and offline marketing strategies. List your properties on rental websites, use social media, put up flyers, network with local real estate agents, get the word out there.
Make sure people know about your amazing properties.
Exactly. And once you have those tenants in place, he stresses the importance of customer service. It sounds basic, but it can make a huge difference.
Yeah, I mean, happy tenants are more likely to renew their leases, right?
Absolutely. They're less likely to move out, which means fewer vacancies and more stable income for you.
It's a win-win.
It is. McElroy believes that treating your tenants with respect, responding to their requests promptly, and just maintaining a clean and safe property, it builds those positive relationships and encourages them to stay longer.
So it's about more than just collecting rent, right? It's about creating a good experience.
Exactly. And finally, he reminds us to stay informed about those landlord-tenant laws and regulations.
Oh, yeah, those can be tricky.
They can be. He recommends consulting with a real estate attorney to make sure you're complying with the rules and protecting your rights as a landlord.
Always a good idea to have an expert on your side.
Always. Okay, so we've talked about acquiring properties, managing them effectively, but McElroy, he doesn't stop there. He dives into some more advanced real estate investing strategies as well.
Oh, this is where it gets really interesting. Tell me more.
He talks about value-add investing. This is where you buy properties that are undervalued or need some work, and then you make those improvements to increase the value and that rental income.
Oh, I see. So it's like fixing up a house to sell it, but instead of selling it, you're holding on to it and renting it out.
Exactly. He gives examples like renovating those kitchens and bathrooms, updating the landscaping, adding amenities like a laundry room or a fitness center, maybe even converting unused space into rentable units,
So it's about seeing the potential in a property, right?
right? Unlocking that hidden value. But he does caution that you got to do your homework before jumping into a value-add project. You need to carefully analyze those renovation costs, the potential increase in rent, and the overall demand to make sure it makes financial sense.
So you need a good contractor on your team.
Oh, yeah, for sure.
Yeah.
And a solid understanding of those construction costs.
Now, he also mentions 231 exchanges. What are those all about?
A 1031 exchange is a way to defer those capital gains taxes when you sell a property. It lets you reinvest those proceeds into a similar property without having to pay those taxes right away.
Oh, so it's a way to keep that money working for you.
It is, and it can be a powerful tool to build wealth over time.
Now, he also mentions syndication, which is something we touched on earlier. Can you remind us what that is?
Syndication is basically when you pool money from multiple investors to buy a larger property. It's like crowdfunding, but for real estate.
Oh, that makes sense.
So it gives those smaller investors access to bigger deals that they couldn't afford on their own.
And potentially bigger returns.
Potentially, yes. But McElroy emphasizes the importance of vetting the sponsor of that syndication, reviewing all the documents carefully, and understanding the fee structure before you commit any money.
It's about doing your due diligence, no matter what.
Always, always do your due diligence. Remember, no investment is completely risk-free. It's about understanding the risks, weighing those potential rewards, and making informed decisions that align with your goals.
It's about being smart and strategic. So, McElroy really gives us a lot to think about, from those basic principles to those advanced strategies. It's pretty inspiring, actually.
It is. He shows that real estate investing is a multifaceted world.
And there's so many different ways to approach it. I like that he doesn't just tell you what to do.
It gives you the tools to make your own decisions.
Exactly. He empowers you to become a savvy investor. Now, before we wrap up this deep dive, McElroy shares some final thoughts on something that I think is really important. He talks about the importance of mindset and personal development.
I love that he emphasizes that.
Me too. Because it's about more than just those technical skills and financial knowledge, right?
It's about the bigger picture.
It's about developing a positive attitude, building those strong relationships, and continuously seeking that personal growth.
It's about being the best version of yourself.
He believes that those qualities are essential for overcoming challenges, dealing with those setbacks, and achieving that long-term success in any field.
Absolutely.
It's a powerful message. Real estate investing, it's not just about building wealth, it's about building a fulfilling and meaningful life.
So well said. I think that's a perfect note to end on. We've covered so much ground today, from analyzing those markets to evaluating those properties, from property management to those advanced strategies.
It's been a whirlwind tour of the real estate world, guided by the wisdom of Ken McElroy. Hopefully our listeners are feeling more informed and empowered to take that next step in their real estate journey.
And remember, it's all about doing your research, building a strong team, and making those informed decisions that align with your goals.
And most importantly, never stop learning and growing.
Keep exploring, keep learning, and most importantly, keep believing in yourself.
And on that inspiring note, we'll wrap up this episode of The Deep Dive. Until next time, happy investing.
Wow, we've covered a lot of ground in this deep dive into real estate investing with Ken McElroy. From market analysis and property acquisition to property management and even those advanced strategies, it's been a whirlwind. What are some of the key takeaways that have really stuck with you?
You know, one thing that really stood out to me was McElroy's constant emphasis on research and due diligence. He doesn't let up on that, does he?
No, he doesn't. He hammers that point home throughout the entire video. It's like he's saying, look, this isn't about getting lucky or following your gut. This is about making smart, informed decisions based on solid information.
And I think that's actually really reassuring, especially for someone who's new to real estate investing. It can feel so intimidating, right? It can, yeah. But he breaks it down in a way that makes it feel approachable, even for beginners. Like he's saying, hey, you can do this if you put in the work and follow a strategic approach.
Exactly. And he's so good at explaining those complex concepts in a way that's easy to understand. Those real-world examples and analogies really help bring it all to life.
Oh, absolutely. That financial quicksand analogy, when he was talking about those seemingly tempting deals that can turn into money pits. That one really stuck with me. It's such a vivid image.
Right. It makes you think twice before jumping into a deal just because it looks good on the surface. You
Hmm.
got to dig deeper.
You got to do your homework.
Yeah.
And I also appreciated how he challenged some of those traditional assumptions about real estate investing, like that whole idea that starting small is always the safest route. He actually presented a pretty compelling case for those larger multi-unit
I
properties.
know. I thought that was really interesting, too. He pointed out how those larger properties can actually offer lower risk because you're diversifying your tenant base and you often have professional management in place.
It's a different way of looking at it. It's a good reminder that there's no one-size-fits-all approach to real estate investing. What works for one person might not work for another. You have to find what aligns with your goals and your risk tolerance.
Exactly. And speaking of finding what works for you, McElroy also emphasized the importance of building a strong team. He made it clear that you don't have to navigate this world alone. Having a network of trusted advisors and professionals can make all the difference.
Yeah, he's all about finding those experts. Attorneys, brokers, contractors, property managers, the whole nine yards.
It's like assembling your own real estate Avengers team.
I love that. Each person brings their unique superpowers to the table.
Exactly. And together you can tackle those challenges and achieve those real estate goals. But beyond the technical side of things, I was really struck by how much McElroy emphasized the importance of mindset and personal growth.
Me too. He really drove home the point that real estate investing is not just about the numbers. It's about having the right attitude, building those strong relationships, and constantly pushing yourself to learn and grow.
It's about that journey of personal development.
Yeah.
Because real estate investing, it can be a roller coaster ride. There will be ups and downs, challenges, and setbacks. And how you handle those challenges, how you respond to those setbacks, that really makes all the difference.
It's about resilience. It's about perseverance. And it's about having that growth mindset, that willingness to embrace those challenges as opportunities to learn and improve.
So well said. And, in the end, I think that's one of the most powerful takeaways from McElroy's message. Real estate investing is not just about building wealth. It's about building a more fulfilling and meaningful life. It's about personal growth. It's about creating those connections and finding that sense of purpose.
It's about using real estate as a vehicle to achieve your dreams, whatever those dreams may be. And I think that's a really inspiring message. So as we wrap up this deep dive into the world of real estate investing with Ken McElroy, we hope you're feeling informed, inspired, and empowered to take that next step.
Remember, anyone can achieve success in real estate with the right mindset, the right knowledge, and the right strategies.
It's all about taking that first step, doing your research, building your team, and never giving up on your dreams.
Keep learning, keep growing, and keep believing in yourself. The possibilities are endless.
And on that note, we'll wrap up this episode of The Deep Dive. We hope you enjoyed our conversation and gleaned some valuable insights along the way. Until next time, happy investing.